Hi, this is Phil Chandler, and we are discussing 6 reasons why apartments are a great place to invest your funds. You know, investors are constantly trying to determine where they should put their next dollars, which usually includes stocks, bonds, mutual funds, ETFs, precious metals, currencies, and real estate. Now, the key goal for all investors typically is to maintain a diversified portfolio to minimize risk and maximize return. Investing in apartments provides a great place to diversify anyone's portfolio, which in my opinion exceed the benefits found in the other investment options. So let's talk about the main benefits to investing in apartments. Number 1, it provides a steady return of cash. Successful multifamily properties obtain their income month after month from tenants, and that income is used to pay the normal monthly operating expenses and debt service from the loans used to purchase the property. Those excess funds left over provide investors a steady source of income. You are not simply waiting for valuations to increase, as with most stocks, in order to realize your gains. You have the ability to receive cash on a regular basis and keep the investment intact. Now, of course, this type of periodic income is available through some stocks paying dividends or bonds paying interest. But apartments do not see the volatility that many of those stocks or bonds would see in a down market. Anyone who remembers the recent recession may also remember the large quantity of dividend-paying stocks that simply postponed their dividends or at least sharply curtailed them in an effort to shore up their stock valuations. Those kinds of adjustments are not needed or seen when your cash flow is coming from tenants simply paying their monthly rent. Number 2, you benefit from using leverage when buying apartments. Multifamily properties are typically purchased with a 70 to 80% loan, and therefore it requires only a 20 to 30% investment of funds. Now, I realize we're talking generalities and not including due diligence and closing costs, but this range is fairly typical. Now, in comparison, unless you're into risky stock options, the typical investment in stocks or bonds requires $1,000 to buy $1,000 worth of stocks. So if we're buying an apartment building for, say, $1 million, we only need to come up with around $250,000 in actual funds to make the purchase. But the cash flow and appreciation that we will benefit from are all based on the full $1 million asset. The benefits of leverage are very powerful when you start looking at your true rate of return on your investment of the actual funds that you have to invest. Number 3, earnings through pay down of the loan. As mentioned before, most apartments are purchased with a 70 to 80% financing. This means that every month a portion of the tenant's rent income is used to pay down a portion of the principal on that loan as it's being amortized. So month after month, this reduction of the loan principal increases the investor's equity. All right, number 4, earnings through rent increases. The valuation of apartments, like most commercial properties, is based on the net operating income of the property. So as rents are increased, typically each year, the investment will increase in value when it comes time to sell it. Now, I realize that many of the expenses, such as utilities, management, and maintenance costs, will probably also increase as a normal response to inflation. However, even if rents and expenses increase at the same rate, let's say 2% a year, the expenses typically only represent around 50% of the rents, which means the property would still increase in value every year. Number 5, shelter of income through depreciation. Apartments, since they're classified as real estate by our friends at the IRS, are able to be depreciated each year while you own them. So, as an investor, part of the income you receive each year from your apartment investment is sheltered, which allows you to delay paying the full amount of tax on the income. Now, to be fair, this shelter is only temporary because once the property is sold, the depreciation will be recaptured and taxes will have to be paid. So if we purchase an apartment property in year 1, but don't sell it for 5 years, then you as an investor have been able to postpone paying a fair amount of your taxes on the income from those apartments for those 5 years. Sort of like a 401k retirement plan. Paying taxes later and keeping more of your income now is always a preferred technique. As a side note, stocks and bonds are typically not categorized as real estate, and therefore you do not have the ability to use depreciation to delay paying tax. But one other side note bears mentioning, and that's using a technique called a 1031 exchange. It's a tax exchange. It allows investors to sell one real estate property, such as an apartment, and to buy another like-kind property, such as another apartment, within a specified period of time. And you can, in effect, roll the profits you made from the first apartment into the second apartment. Now, this allows you to continue deferring paying the tax on the profits that you received from those first apartments. Number 6, stability in the return of your investment. Any investor that participates in the stock market realizes that changes in stock valuations can be caused by many things that have nothing to do with the company itself. We have all seen how wars, political bickering, foreign conflicts, and simply bad weather events can push losses to those stock valuations and have simply nothing to do with the company. And all we can say is, what the heck? Any announcement of potential interest rate increases from the government or simply a TV show host will kill your bond valuations, even if those interest rates never actually go up. This is just the nature of a world-type economy and instant access to information through the internet and cable. However, apartment valuations are based mainly on the income they generate, and looking at historical financial cap rates as the benchmark, all apartments maintain a fairly consistent value and with proper management are fairly immune from outside events. Now, I'll be the first to agree that no investment is free from risk, including apartments. But history is a pretty good teacher to us, and it clearly confirms that investments in apartments is a great way to diversify your investing funds.